Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 4th of September. It may have been a quiet month in August for company reports, certainly towards the end, but investors nonetheless have had plenty to chew over. For the main US indices, it's actually been quite a weak month, with each of those finishing down around 2%. And generally speaking, investors have had the wind taken out of their sails after a bumper start to the year on the concerns that perhaps interest rates may have to stay higher for longer in this ongoing battle against inflation. That's certainly been enough to take some of the shine off the performance of the year to date. That being said, there are increasing hopes for a soft economic landing in the US, which is something that investors are certainly clinging on to. And there are some data coming through, such as inflation and consumer spending, which are playing into that particular narrative. There's even been some relatively positive noises coming out of China over the last couple of days, after the embattled property sector may be getting some help. So, despite that weak August, we've still got a situation, particularly in the States, where markets remain robust. In the year to date, the Dow Jones is up by 4.8%, the S&P 500 is up by 17%, and the Nasdaq continues its march, it's up by 34%. FTSE 100 pretty much trading around the flat line. It's been impacted in particular over August, up around 0.3% so far this year. So turning to next week, there's a few companies which we're going to get updates from. The first one, Barratt Developments half-year numbers. Obviously, the house building sector has been particularly under the cosh this year. Falling house prices, question marks over mortgage availability and indeed affordability have been some of the things that have been playing against them. Barratt's has actually held up quite well. Over the last year, the shares are up 9%. In the year to date, up about 14%. But to put that into perspective, if you look back over a 2-year period, the shares remain down by around 39%. Barratt's have been trying to make some amends to a faltering revenue line. They're looking into the rental market, the property exchange market, and the part exchange market, quite apart from which, obviously, they've got a sharp eye on costs at the moment. Also, their land acquisition has become highly selective. So it'll be interesting to see what they consider to be the state of play at the moment. And of course, in the meantime, there's a fairly punchy dividend yield of 8%, which is paying investors to wait. There's also a trading statement due next week from Currys. These are shares which have seen a decline of some 20% over the last year, about 6% or so down in the year to date. The UK revenue business was up about 53% when we last heard from them. This is obviously partly down to their omni-channel offering and the ability of face-to-face advice, but it's the Nordics region which has really dragged on the shares. The Nordics actually account for about 40% of revenues, and what's happening there is that prices have plummeted purely down to an overstocked market. So that's been the real drag on the share price. And finally, WH Smiths also have a trading statement next week. Shares are up about 7% over the last year. This is its Travel UK, its largest division, which has particularly been driving the positive vibes around this particular stock. Obviously, they've got what you might call a captive customer base with their presence in the likes of motorways, railways, hospitals, and of course, in particular, airports. And with the increase in travel over recent months, that's very much something that has played into its hand. So it will be interesting to see whether the 24% increase for this UK business, as last reported, is something that will basically carry over into this trading statement. Thank you for watching. Have a great week.